Kicking things off was Infosys, and it did it in style. For the second time in a row, Infosys has beaten street expectations with its quarterly performance. Dollar revenues growing by 6%, the highest in the last 16 quarters. In constant currency terms, that's a growth of 6.9%. The Rupee revenues coming in at 6%, and net profit jumping a sharp 12%. The IT giant has also maintained its 10 to 12% constant revenue guidance. However, Poornima, Murali and Kritika Saxena report that the celebration has been bittersweet. Here's why.
It's been a win-some, lose-some quarter for IT bellwether Infosys. First, the wins. In a clear sign that a revival is underway, Infosys saw $983 million worth of new deals being won. A steady growth of up to 10% by its top 10 clients and a 2.5% improvement in pricing. Now the not-so-good news. The company is bracing for seasonal headwinds it will face in the third and fourth quarter of the financial year. So the management, which was expected to revise guidance, has maintained its guidance in constant currency terms at 10 to 12%. But MD and CEO Vishal Sikka says he is working on a strategy to overcome seasonal headwinds and beat that guidance.
There was 7.2 to 9.2 on June 30 currency. It is that currency changed now because of the fluctuations in the currency markets. And so that is on September 30 terms, it is 6.4 to 8.4 or whatever. But on constant currency, the guidance is what it has been since the beginning of the year, which is 10 to 12% constant currency growth in revenue.
So just clarification again, you have not cut the dollar revenue guidance in any way?
We have not cut the dollar revenue guidance in any way.
The other big positive for the company has been that attrition has come down to 14%. And Chief Operating Officer Praveen Kumar is confident a further fall is definitely on the cards.
Last quarter it was 14.2, it's 14.1. So we are already in that range. And we'll continue. It's not that we are declaring victory and all. We'll continue with various initiatives to continue to engage with people.
Volumes, however, have been a bit of a letdown. At 3.7%, volume growth in the second quarter is lower than the 5% clocked in the previous quarter. In addition, the management admits that despite pricing growth in the current quarter, it expects to see some pricing pressure where large deals are concerned.
Overall, in terms of Q3 and Q4, we see that seasonal dip, but we are working very hard to make sure that we buck that trend.
But here's the development that has stunned the street. Infosys will say farewell to CFO Rajiv Bansal, who has decided to step down after 16 years with the company. He will hand over charge to MD Ranganathan. Experts say Bansal's exit raises questions as to whether the company, which has still not found stable ground, will be able to cope with yet another management change. But both Bansal and the incoming CFO say they're not worried.
Finance team and the finance strategy of the company has already been very, very solid. There is no need to change anything. So I think the focus of hedging strategy has always been on predictability of cash flows. We'll continue to focus on that. At this point in time, I do not foresee a significant change in our hedging strategy.
Maintaining cash flow without hurting margins or growth may not be that easy.
The next 2 quarters will see Infosys facing pressure from some key verticals like retail and energy. Energy, for instance, is expected to remain sluggish till the end of next year. The company expects immediate pressure to come from some clients in the banking vertical, which could derail growth trajectory. However, the company has announced an incentive structure for its sales executives in an effort to offset these pressures and says it will concentrate on accelerating automation across verticals and winning some large deals to keep its growth promises. With Kritika Saxena in Bengaluru, Poornima, Murali.
The highlights of the quarter that's gone by for Infosys.